How's it going, everyone? This is Hunter with RaisingCapital.com. I just got done with a conversation with Brian where we're going to talk about how to attract, educate, nurture, and close leads and raise not hundreds of thousands, but millions or tens of millions of dollars. Check it out.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Get ready for the Midwest Real Estate Investor Conference in Grand Rapids, Michigan. Join hundreds of real estate investors for networking, learning, and growth. Be sure to mark your calendars for April 24th and 25th of 2025. Hello and welcome to episode 472. Raising capital for your investment opportunities can be tough, especially in these uncertain times. But with the right strategies, it's possible to stand out and attract investors, even when others are stepping back. My guest today, Hunter Thompson, is the founder of RaisingCapital.com and Asym Capital, where he has raised over $100 million from hundreds of investors. He also hosts RaiseFest, the #1 conference for people who want to raise capital. He's here today to share practical tips on generating leads, connecting with high net worth investors, and raising capital effectively in 2025. Hunter, welcome to the show.
It's an honor to be on, and thanks again for having me.
I'm excited to have you on the show today to talk about raising money.
It is time, and 2025 is going to be a massive year. It's going to be more difficult to find deals, but if you can buy deals in 2025, it's going to be so good by the time we get to 2028 that the people you sell deals to in 2028, they're going to be like, the deals you bought in 2025 don't count because it was such a no-brainer back then. So those are the kind of deals I want to buy.
Before we get into just what it's going to take to raise capital in 2025, give us your outlook. Why do you say that? Why do you have the optimism that you just shared?
So for context, we at Asym Capital only buy deals in Phoenix, Arizona. We have about a 40-mile radius that we look for. We look for 70s, 80s, 90s, and 2000s build deals. And my partner moved there in 2022. We went all in on Phoenix. We said no to everything else. Since then, we underwrote 200 deals, submitted offers on 3, put 1 under LOI, and did none in 2024. None. And the reason for this is that deal volume cratered. And the reason for that is that you would only sell right now if you were distressed. And so if you can pick off a couple of distressed deals that are 25% discounts to previous market highs, that is historically significant in this country. It is very rare to have a 20% reduction in prices, peak pricing in real estate, especially desirable multifamily in a competitive market. And so what's going to happen in 2025 is 2 things going to happen. We've got a ton of loan maturities coming due. We also have a dramatic reduction in deliveries. We also have the same sound fundamentals that everyone wants to invest in. So you've got all this thing happening at the same time. You've got booming economies, growing population growth, growing income growth, growing jobs, Fortune 500 companies moving to these various markets. But you've got sellers with their hair on fire because their debt's coming due. So the property itself might be fully stabilized. The deal we're about to buy right now, by the way, is fully stabilized. We're not even implementing a really big value add to it, but the seller has to sell because the rate cap is expiring and they're on floating rate debt. And that's the story of 2025, is that floating rate debt product coming due, properties probably performing very well, and you can scoop a couple up. And that's what I want to do.
2025 is going to be an interesting year for raising money. And we've really had our ups and downs when it comes to raising capital from high net worth investors. I mean, 3 or 4 years ago, there was a lot of money out there that you could raise and employ into deals. But tell our audience what has happened in the past couple of years that has made it a lot more difficult now to raise capital.
A couple of things happened. Number one, in 2013, the Jobs Act was ratified and it made it legal to talk about real estate deals on the internet. And this is an incredible and noteworthy change. And so there is this increase of marketing and increase of the whatever. It became publicly available that you could buy deals and invest in them passively. And so for a lot of people, this was new. This was a novel strategy. If you're a dentist, doctor, lawyer, you don't have to just put money in the S&P 500. You can buy highly desirable institutional quality assets as an LP investor. And this created a massive boom in the industry of interest into investing deals like this. Then interest rates, which were on a 40-year down and to the right trajectory, did an about face and increased faster than they have in 40 years. And it created massive financial distress for these assets. And so you have all these new investors that came into the space. Some of them made quite a bit of money in the run up to 2022. Then 2022 happens, the Fed changes its tone and changes its actions and crunches anyone that was on floating rate debt. And by the way, you basically had to use floating rate debt to buy deals in hyper competitive markets. But the reason they're competitive is that the fundamentals are strong. So what this means to me is that in the markets where the fundamentals are strongest, you now have the most distressed sellers because they're the ones that had to use floating rate debt to make deals pencil back then. And so as we go into 2025, raising money will be more difficult because there's people that lost money in real estate, something that doesn't happen very often. And there's a lot of people that are burned. But when you are crawling through glass to raise money, it almost by definition means you're buying at the right time. Because that's the opportunities that create discounts because it's hard to raise money. So when you're buying and it's easy to raise money, it's like a warning sign. When you're buying and there's very few deals because no one would sell unless they're distressed and it's difficult to raise money, you know you're buying at the right time without looking at any market indicator other than that. So that's the story right now. And I've lived through enough to see how this story ends. And it ends in our investors, myself, making quite a bit of money and on a good risk-adjusted basis.
What you just said reminds me of 2008, 2009, when I started investing. And again, just like you said, the money wasn't there. It wasn't just investor money. It was the banks weren't lending either. And I think, I know that it's a little different in the larger multifamily and apartment space that you're talking about because you have Fannie Mae and Freddie Mac and all kinds of debt available. But in the smaller multifamily, I'm seeing a lot of reluctance on the side of lenders to even lend in smaller multifamily. So I agree with you. That indicates that there's opportunity if you can figure out how to take those down.
Absolutely. And there will be opportunity, but it's way better than 2008. So 2008 looks good on a chart. You can see the chart and you were there, so you know. You see the chart and you go, how good would it have been to buy deals back then? Well, good luck because you couldn't. You couldn't borrow any money, let alone raise any money. Everyone was going through foreclosures, divorces, kids moving home from college unexpectedly, having to cut expenses. That's the story back then. This story is none of those things are present. We don't have 10% unemployment. We have historically significant unemployment, historically significant low unemployment. So you've got all the makings of a strong and healthy economy in terms of what we focus on in real estate, but distressed sellers because of interest rates. That's a very different scenario.
Let's talk about raising capital because that's what you're all about. And having been through your Raise Masters program, I know you have excellent material and training. I went through that a couple of years ago when it was a lot easier to raise capital. What has changed? I mean, what is your outlook and advice and training now geared toward in going into 2025?
Going into, let's say, we launched Raise Masters, which is our coaching program for capital raisers, in 2021, basically January 2021. And at the time, a lot of the content was around how can you make your capital raising business more scalable? Because I know a lot of you, and this is my marketing speak, I know a lot of you are sick of doing these one-on-one lunches and driving around doing one-on-one meetings. And I'm going to show you how to make a business more scalable using things like webinars and podcasts. And so you never have to do another one-on-one meeting again. That was kind of what we talked about in 2021. And that worked. People could use our systems and scripts and processes and templates and do a webinar and raise $7 million in 43 minutes. And that was, all of our case studies were stuff like that. And then what happened was the market started to get accustomed to things like webinars. The market started to cool off dramatically in the wake of 2022. And now we have to crank up the intentionality and what we call in marketing, the direct response strategies. So now we're seeing a lot of people have success with things like integrating, still using systems and processes and one-to-many and webinars and these types of things, which we still teach, but sprinkling in non-scalable activities that will make those hyper-scalable activities really work in today's climate, AKA LinkedIn direct messaging, Instagram direct messaging, Facebook direct messaging, prompting people to get on a call to set a really good intentionality of that first relationship, that first connection is so important now. And then also dramatically increasing the amount of intentionality we put before a webinar, before a call, after a webinar, after a call. Because in the past, you could send out an email, send out a webinar, raise a bunch of money. Now, you send out an email for a webinar in a week. In that 7-day period, people are getting inundated with negative economic data that gives them pause. So we have to overcome that. We have to, in the lead up to a webinar, start addressing their concerns, their limiting beliefs. Should you invest in real estate when interest rates are higher? That kind of question. Or, for me, it's Phoenix. Is Phoenix running out of water? Trying to do the best thing we can do to get in front of those questions. And so, like anything, the market adapts and changes, but, RaiseMasters has done a good job of being 6 months ahead. And if you're 6 months ahead in this game, that really matters as the market changes. So anyway, it's not even a pitch for RaiseMasters. It's more a pitch where you got to be super intentional about being ahead of the curve, and effort towards that will serve you well.
Starting with just the objections, investor objections, because you're raising money in I would say a good area when you look at it on paper and you look at the data, Phoenix, but you're right. In the news, in the media, there's a lot of negative data, running out of water, the heat, just the issues that the overbuilding, oversupply. So how do you tackle that and meet those objections head on before they're even brought up?
One thing I'll say, and rather than try to address those questions, because most people listening to this aren't investing in Phoenix, it's not supposed to be a pitch for Phoenix, but let me give you an example, right? When we start getting questions like that, we do what I think everyone should do, which is don't hide from it, lean into it. So when it comes to water, for example, you can use this as a framework. Like, look, there is a $65 billion investment from Taiwan Semiconductor taking place in Phoenix right now. It is the single largest international investment in the United States in the history of the United States. There are multi-billion-dollar investments taking place from several Fortune 500 companies all over the country to Phoenix. Those companies have teams of surveyors, engineers, city planners. They know that Phoenix is not about to run out of water. So now that's not all the research I've ever done, but that would give you an example of the kind of talk track I would use to talk about that. And it's the same kind of thing with oversupply. Actually, if you want to see an example of this, just go to asymcapital.com. You check out our podcast. I talked about, is it down and to the right or down and to the right or up and to the right? And I talked about why we would rather invest in, quote, high supply markets than supply constrained markets. Now, I know that that's counterintuitive, but it's good in marketing to say counterintuitive things, but I deeply believe that. The reason that you have supply constrained markets is usually due to regulation. And that is not the game we want to play. Regulation is extremely unpredictable, and there's no 3-year outlook, and new administrations can come in and change. And that's not how we want to play. That's why we don't invest in Los Angeles, right? But development is extremely predictable, right? And it's based to a large degree on market demand. So if a developer is going to bet their life, which is what I call a recourse debt, that there's going to be 200 people moving to Phoenix every single day, they're willing to go on that $20 million loan to build a $40 million development. They've done some research too. And it just so turns out that you can predict the development of any market pretty closely because it takes years to develop assets. You can also predict the population growth as well. And so Phoenix is not a distressed market. It's very different than Austin, by the way. There's been an incredibly and historically significant amount of development in Phoenix, but the absorption rate has been insane. And now assets are 93% occupied and rents are raising. So it's pretty wild. Anyway, my point there is that regardless of whether or not you invest in Phoenix, you should know these data points like the back of your hand so that when people are asking, you're there to reveal what you know, but also you can follow up and be like, I just did a podcast about this topic and here's the data more in detail. And that's really compelling and really assuring for investors.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Save the date for the Midwest Real Estate Investor Conference happening April 24th and 25th of 2025 in Grand Rapids, Michigan. This event is the perfect place to connect with fellow real estate investors, gain valuable insights, and elevate your real estate game. With a lineup of expert speakers and numerous networking opportunities, you won't want to miss it. You talked about the intentionality of social media, leveraging Facebook, LinkedIn, direct messaging. Can you go into a little bit more detail about that? I mean, are you, how important is social media and those resources to raising capital?
If you want to scale, especially if you want to get away from only dealing with friends and family, you basically have to have some sort of system for attracting leads, converting them, and getting them to reinvest. And so sometimes we get on calls with people and they're like, I want to scale. And we're like, okay, what is your current lead capture mechanism? And it's just like silence. And you can see that the wheels are turning. And by the way, this is not calling anyone out. Like, I'm sure there's people listening to this right now that they're like, wait a minute, leads. Yeah, like you should be thinking like a business owner. You need leads to have a business. The benefit of real estate is that it's so freaking good. You can make millions of dollars without thinking like a business owner. But wouldn't it be better if you thought like a business owner? And by the way, this is me too. I mean, I got in this business because of the benefits of real estate. But if you start implementing strategies and tactics that other industries have to implement, and you apply it to the best wealth creation vehicle of all time, you'll have way better results. So to answer your question directly, social media is great because it allows you to take traffic, people that are on social media following you, you create content, it attracts them to you, and then take them from traffic Zuckerberg owns and controls to traffic you own and control by generating a lead through DMs, getting their email addresses, exchanging some digital knowledge product, an ebook, a podcast, a downloadable report, an Excel model in exchange for their email address. And boom, you have exchanged and now you've created your first lead. And even if you do a bad job at this, that is a true north. And so go that way. Even if it's going to ChatGPT and saying 7 things doctors need to know about investing in real estate, and ChatGPT spits out the 7 things, you rechange it, write a new little, put your spin on it, go put it into a Google Doc, hire someone on Fiverr to make it look good. Now you've got your first ebook, and that you can exchange for an email address.
The mechanism by which you capture those contacts, because if people can be active on social media, but there's a difference between putting out content and being active on social media and actually knowing how to leverage the people who are coming into your ecosystem. What do you recommend there?
Basically, we use something called a squeeze page, which is very simple. I mean, if you go to, I'll give you a perfect example, go to, and I'll use mine, RaiseFest.com. There's a website. You'll see a page about a conference. If you click it, you'll see an opt-in, which will be first name, last name, phone number, email address. That is my opt-in mechanism. That is my lead capture mechanism. If you don't have a conference, that's totally cool. You can use the same kind of concept, but for an ebook, like a free ebook. Like I think an example of this for us is raisingcapitalforrealestate.com/free training or free dash training. This is a very simple page where you just see like a GIF that's like, click here to learn more, and they will be able to put in their information. So what I would suggest is model those pages, particularly the second one, because it's more simple, and put a picture of your ebook, first name, last name, phone number, email address. Once they input that information, the next page will say, thank you, I just emailed you the ebook, and that will trigger an automation where they can get that ebook. And that's basically a requirement in today's world. If you want to get a little bit more cute, you can also do things like on the thank you page, have a video of yourself being like, hey, thanks for downloading my ebook. I'm really excited to give it to you. I just emailed it to you. Before we do that though, if you are an accredited investor and you're looking to invest a minimum of $50,000 in Phoenix, click this button below to book a call with me, and I'll see you soon.
That's one of the things I appreciated about going through Raise Masters is you're very good at automation and putting together the systems to kind of create that flow of bringing investors and also other Raise Masters into your ecosystem. How much time does it actually take you to put all that together? Because I'd imagine there's an enormous amount of work that goes into figuring out those systems and automation.
Totally. So I think that number one, most people listening to this show, I want you to be a marketer. But being a good marketer doesn't mean tinkering with ActiveCampaign or Go High Level. That's like something that you can hire someone on onlinejobs.ph for around $500 a month to do as a full-time marketing assistant / virtual assistant. But what marketers do is they understand stories and emotions and selling in a scalable way, which is basically what marketing is. So I don't spend a ton of time tinkering with these things. In fact, my team has a KPI for me in 2025 to not make any changes in ClickFunnels because I have a team that can help me do that. Now, if you say, I don't have the money for a team, onlinejobs.ph is a really good place if you want to get full-time talent for $500 a month. If that's too above your budget, upwork.com, you can get people that will do one-off jobs and get this set up for you. And that's really what I suggest people too. Who Not How is a great book that kind of outlines why this is an important skill to learn. But I don't spend a ton of time tinkering with technology anymore, but I do spend a lot of time coming up with the concepts and the flow and what the customer journey will look like, because that is a very high leverage time for me. So all the content that you created and the videos that I create, that's something I can't outsource. So I do spend a lot of time doing that stuff. And one last thing, I have a partner that's on the operating side. So my partner that lives in Phoenix, that is on the boots on the ground asset management side of the business, he's not doing this stuff, but I am. And that's why a lot of real estate companies have 2 people, one that's on operations, one that's on the capital raising side. And it's because they're very different skill sets.
How has artificial intelligence changed fundraising?
It's going to change it massively. And I think we might be on the brink of kind of like changing the game. But one of our coaches, Catherine Bell, some of you may have heard of her. She's a rock star. She took a ton of her own content and uploaded it into a chat AI technology that now investors can go to her website and ask her questions about deals and get responses in her voice from an AI. And so people are now asking her questions indirectly that maybe they wouldn't have the courage to ask her. What's a cap rate? What's debt service coverage ratio? What about this deal versus this deal? And they're getting responses that are legitimately correct, but without taking her time. That's a big one. Another one, I'll give you guys a couple tips. We have not implemented this yet, but we're in the process of doing it. We're using an app called Structurally.com. Structurally.com. If you go there right now, you can actually test their AI, which is it basically is designed to call leads that have already opted in and prompt them to book a call with you. So when you test it, you're not going to believe it. It will announce that it is a bot, but no joke, I literally thought it was not a bot. I thought that even though I thought they were trying to sell me on the software. So they're like, yes, this is a bot. It sounds like a woman that understands. It was insane. So go check that out. It's very cool. There's other competitors. We haven't implemented it fully yet, but we are about to, and it's crazy. So that's the future, I think.
Hunter, why don't you tell our listeners how they can find out more about you? And I think more importantly, to talk about RaiseFest, which is coming up. Well, this is going to come out in January, and RaiseFest is coming out at the end of, or in February, right?
That's right. If you like the content we talked about today, that's kind of like level 1. We want to go from level 0 to level 5 as quickly as possible. Also, it's good for networking, which I'll talk about. But yeah, look, there is plenty of conferences out there that talk about finding deals, underwriting deals, how to talk to brokers, how to talk to lenders. When it comes to what I think is the most desirable skill set in the world, there's only one, which is RaiseFest. So if your goal, like if where you are in your business is that you're ready to bring this thing to the next level and you want to start attracting leads and raising millions of dollars, just check out RaiseFest.com. It's in February in Phoenix. Great weather, awesome DJ. It's going to be a ton of fun. Now, if you need to learn about what a cap rate is and how to find good markets, we're not going to be talking about that. But if you are ready to scale, it's an awesome place to be.
Having been there, I was there. It would have been 2 years ago that I was there. Just really, really great speakers. And then just the networking was amazing too. And I'm still in touch with some of the people I met there. So.
That's what I was going to say. So we don't really have time to get into this right now, but we have a lot of content around fund managers, people that create funds to invest in other people's deal. And so because we create a lot of content around that, a lot of our attendees at RaiseFest are fund managers. So if you like what I'm saying, but you're like, wouldn't it be nice if you found someone that's going to write a $500,000 check or $1 million check? There's a lot of them at RaiseFest. Now, I'm not promising you're going to go there and raise $1 million or whatever. That's not the intention, but they're there. And you can probably attest to that as well. I mean, that's legitimate. That's happening. And that's our number one capital raising strategy is from fund managers. So that's what we're going to serve to.
I always ask, what's your favorite hack or app? And you've shared a lot of great apps and advice already. But is there anything any other hacks or apps that you employ in your business or your life that you'd like to share?
I felt like I kind of always tried to find the path of least resistance. And maybe I skipped a couple steps along the way. And to do that, I was trying to get results as fast as possible. And so for me, I wanted to focus on raising capital because I felt like that was the path to play bigger as fast as I could. Regardless of what your inclinations are, going all in on one skill set is really prudent. So learn one thing, go all in, and that allows you to be known as the guy, that blank guy. And it also allows you to have no competitors. So I talked about how RaiseFest is one of maybe none other conferences that are very focused on raising money. There's a couple out there, but it is what it is. Like, I don't really know them kind of thing. So just to be able to make that claim, we're the number one at this. Whatever your thing is, you want to be able to be the number one at that and stay out of everyone else's lane, because then there's partnership opportunities. Then they want to have you be part of their thing because you don't compete with them over clients. It's really good from a skill set standpoint, but it's also really good from a marketing standpoint. So whatever that thing is, that's an incredible hack. Just be the number one at something.
Hunter, it's been a pleasure having you on the show, and good luck with RaiseFest in February. What's the date again?
February 19th through the 22nd.
And it's in Phoenix, Arizona. You can go to raisefest.com. Hunter, thanks so much for being on the show today.
Super appreciated.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIGinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. And remember to save the date for the Midwest Real Estate Investor Conference on April 24th and 25th of 2025 in Grand Rapids, Michigan. It's going to be an event you won't want to miss, packed with invaluable sessions and opportunities to connect with like-minded investors. Keep listening for more updates, and we look forward to seeing you there. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.